I'm Megan Trask, Director of the Investment Committee here at CTWM, and I am joined by my fellow partner, Jarrett Solomon. We hope everyone's having a good start to summer, although I know market conditions may be making it difficult to fully celebrate and appreciate, and that's really why we're here today. So as of last Monday, the market did officially enter bear market territory. That's when a broad index like the S&P 500 is down 20%. So we wanted to not draw more attention to it because we know you're probably seeing the news and headlines and when you turn on the TV. However, we want you to know what we're doing behind the scenes, and we want you to know that we've planned for markets like this. So Jarrett's going to start us off and talk a little bit about what we're doing from the investment management side, what the investment committee is doing to address this in your portfolios.
Thank you. Yes, as Megan described, we are constantly at work behind the scenes with the goal of making sure that your portfolio always represents our best and most current thinking, always. Now, that's particularly relevant in periods of unrest, like the one we are in now, but it's always the case. And so, as you've probably heard us say before, the most important decision that we can make on your behalf is what your high-level target allocation is, that high-level target to stocks or growth assets, or bonds or more conservative assets. The reason that that's so important is that that's going to drive the majority of your return experience over time. Now, what happens is once we've put that target in place, the actual allocation to those high-level asset mixes will diverge over time, right? If you have a target to stocks of 60% and bonds of 40%, that actual allocation will stray and can stray pretty dramatically over time based on market conditions. When we're in a bear market like we're in now, your actual allocation to stocks will be less than your target because stocks have performed poorly relative to how bonds are. A very important decision that we as an investment committee can make is, when do we rebalance back to target? In this example, when do we add stocks or risk back into the mix to achieve a more neutral risk level relative to what your high-level target is? We as a firm have made the decision to date to not rebalance back to target. That is an additional layer of risk control. There will come a time where we look at market conditions, which we study daily, and vote to implement a change that would bring your target allocation back to its target. It has not happened yet, but it will at some point.
And let me just interject to remind folks, the opposite was true really over the last 3 years, where we were almost constantly trimming back your exposure to stocks as that target went above the desired exposure because stocks were performing really well. And it's that constant attention to the high-level asset allocation and those rebalancing decisions, again, that are really most important to performance and returns over time.
That same decision was made in February and March of 2020 when the market dropped 35% in a month as a result of COVID. We purposely held risk levels below target for a period of time and then slowly reintroduced risk back into the portfolio, which in hindsight turned out to be an awfully opportune time. The other component of portfolio management is, how do you fill those buckets? So as we consider that high-level mix relative to its target, the other component of portfolio management is making sure that how we fill those buckets also represents our best and most current thinking given market conditions. The third thing I'll mention, which is how we make lemonade out of lemons, is this whole idea of tax loss harvesting. So bear markets, down markets are inevitable. The question, as we've been discussing, is what to do in those environments. One thing we're constantly looking for are tax loss harvesting opportunities, which is an asset that you can use on your tax return to net against other gains that you'll experience either this year or in future years. while keeping your allocation intact. So there's really no downside to active tax loss harvesting, and is something we spend a lot of time focusing on.
Thanks, Jarrett. So to recap, on the portfolio side, we're making and constantly confirming the decision about how and when to rebalance portfolios. We're maintaining our diversification among the different asset classes, and we're looking for tax loss harvesting opportunities during down markets. Let's jump to the planning side a little bit. You hear us talk about this probably ad nauseum if you've been working with us for a long time, but it really is each of our clients' individual plans that dictates that high-level asset allocation decision. And during the planning process, we test for markets like this to ensure that your current investment allocations will allow you to weather through these market conditions. If we didn't think markets like this would occur, you'd be 100% in growth stocks, which most of our clients are not, because most of our clients have needs from their portfolio either now or in the future. And so, looking at those projections, confirming that your plan is still successful even with a bear market is really essential. And we'll continue to do that throughout this process. And, we really can't emphasize this enough. This is why you hired us. This is what we're here for. If you have any questions or concerns about how your projections or plans may have changed, or want to dig into the portfolio more, please call us. Call your advisory team.
If I can just add one other thing. From our perspective, the term planning is very purposeful. The term planning in financial planning, it means the work's been done in advance. You count on us to make decisions on your behalf and plan for them, and not wait for these types of environments to wonder if you're taking the appropriate amount of risk, or to decide that, hey, we should probably look at your portfolio. We've done the work in advance. These periods aren't pleasant, but we know that that's part of the deal. And as always, we appreciate your sticking with us.
Thanks, everyone. We'll talk to you soon.